It's 2024. Happy New Year. Hope you had a great holiday season. We had a wild 2023, and people that were invested, especially the ones that went through a lot of pain in 2022, they were very happy at the end of 2023. Now, this video today is going to bring you up to speed on the Fired Up Wealth Community Portfolio and the top 7 holdings. Now, this portfolio was created in 2022 to try to help teach younger investors or people that have a longer time horizon how to invest, how to build a growth stock portfolio. Now, this portfolio is not focused just on alpha and hyper growth, and it might sound counterintuitive, but it's really about trying to get to an end goal in a certain amount of time. We talk about 3 pillars. You're going to have time in the market. If you're young, that's priceless. You can't buy time. You're going to have the amount of money you invest or capital, which you can control to an extent, but of course you can't just plant a tree in the backyard that grows money. You can, however, do things like better yourself to make more money, have side hustles, you can spend less. The ultimate goal here is to, make as much as you can, save as much as you can, and invest as much as you can in the market. And then that third pillar is going to be returns. And of course, you're always going for the best returns. But I talk about having a plan and sticking to it and building a blueprint that helps that plan come to fruition. Now, if you have a longer time horizon, you've got time on your side and compounding, you don't have to necessarily be as risky. The flip side of that, the more time you have, you can make mistakes and you can make up for it. If you have a shorter time horizon, you invest very differently. Now, I spent a lot of time thinking about how to put this video together. And it's a new year, and you're really looking at a new version of Eric. I don't mean to sound cynical when I say this, but there are really 2 types of people, especially on the internet, on a platform like YouTube. There's the very small percentage, that very tiny bucket that we call investing aliens. They want to learn and they want to grow and they want to generally achieve financial freedom. It doesn't mean retire early and watch Oprah Winfrey all day. It means achieve financial freedom and enjoy the life that you want to live. But ultimately, there are these people that are investing aliens. They want to learn. They want as much education as they can to make themselves better, not only as an investor, but just as a person in general. The other bucket, and really the majority, unfortunately, on a platform like YouTube, is generally people that just want to make a quick dollar. They want to go to a video like this, see this top 7 stocks, and move on to the next video. These people generally have trading mentalities, and ultimately they're usually newer investors that just don't know what they don't know. Anybody that's invested in the market for a while, they understand the importance of learning and constantly growing. So I encourage you to watch this video, even though a lot of you won't anyways. You're going to just fast forward to the part where I covered the top 7 stocks. So we have something that we call the Fired Up Wealth Blueprint methodology. And what that's really doing is using pillars, use different pillars to try to build a growth stock portfolio that's diversified. And this portfolio includes ETFs and dividend stocks. So a lot of people think they just have to be a hyper growth investor or just a dividend investor, DGI investor. You can really have the best of both worlds and have a blended and balanced portfolio that helps ride some of that volatility. And you get to own some core type positions that help you sleep well at night. We call them swan stocks. ETFs are going to be a great core, something that you never really have to sell. And even though those aren't actively managed, they are managed indirectly in the sense that new companies come and go all the time. If you look at 20 years ago, what was in the S&P 500, it's a completely different thing. You could have owned the S&P 500 index and you could have realized those gains along the way. Now, of course, when you're trying to beat the market, you want to have alpha over those ETFs, especially the S&P 500, which is generally going to be the market. So what you do is you build growth and spec stocks around this core, and then you still have a core of growth stocks that are going to be less risky than some of those hyper growth stocks and those spec stocks. Now, the biggest mistake that new investors make, what most people do is they decide that they want to invest in the market. They download an app like, say, Robinhood, and they just start buying stocks. They buy a couple of stocks. They haven't really done a ton of due diligence. They don't really have a plan of what they're trying to accomplish. And so the number one mistake that new investors make is they don't have a plan. I call it a blueprint. If you build a new house, you need a blueprint to know exactly where all those materials go. And a blueprint blueprint for a home is very precise. You need to have the exact amount of lumber, nails, and so on. And so we build a portfolio, we design a portfolio based on each individual's needs, risk tolerance, goals, and suitability. So if you have, say, 20 years and you have a high risk tolerance, you're going to build a much different portfolio than someone that maybe is older. They only have 5 years to invest, or maybe they're going to be retiring soon. And you have that spectrum I talked about, the accumulation phase and the preservation phase. Some of you watching might have a much higher risk tolerance, and you could be a 15 out of 10 on our scale. But I'm using the approach, if I were managing your money, which I'm not, and I'm not your financial advisor, you generally aren't going to tell people to go buy a basket of meme stocks, right? So we use pillars. And in this design, this 9 out of 10 sample portfolio, you can tweak this however you'd like. So we have 60% in growth stocks. Now with growth stocks, you have to keep in mind that every business has really a life cycle. And it might start as a spec stock into a hyper growth stock, growth, mature growth, DGIF, all the way to an income stock. And so the point here is keep in mind that a hyper growth stock, like say a Snowflake, is going to be much different than say a Google, but they're both considered growth stocks. So you're going to invest in a variety of growth stocks, and that's 60% of that portfolio. Next, the most unpopular pillar is going to be ETF at 20%. Now you can still be aggressive with ETFs because you can buy things like QQQ, and if you're really aggressive, you can buy things like ARK. I generally would call that spec, but you can do whatever you'd like with your money and your portfolio. Some example ETFs that work great for long-term investors, in my opinion, the VU, that's the S&P 500, the SOXX, or the SMH, these are semiconductor ETFs, QQQ, the NASDAQ 100, and another you could consider is VGT. This is the Vanguard Information Technology ETF. Next is going to be what we call the spec basket. These are speculative stocks. So these are higher risk, much more of a story stock. They don't really have a whole lot of fundamentals. So back in 2021, we said anything that's a SPAC is a spec. Something that's crazy expensive, that's burning cash, not profitable, it could be a spec. And there's a fine line there because some people might call a stock spec and others might call it growth or hyper growth. So an example would be something like maybe a SoFi. Some of you might call SoFi a spec stock. Others might just call it a growth stock, a higher risk growth stock. So it's in the eye of the beholder. But overall, if you look at SPACs, if you look at companies that are small caps, that are burning cash, things like that, that are risky, and they're more of a story, they could be a 10x or 0. That's what we call a spec stock. And that's 10% of this portfolio composition. In that last basket, 10% in dividend stocks. Now we like to focus on what we call DGIF. That just means total growth. So focusing on the growth of not only the share price, but also the dividend. So examples would be like a Nike, a Tractor Supply Company, a Wingstop, and so on. These have smaller dividend yields, and they're stocks that you plan on holding for many years where that dividend can grow, and you have a very attractive yield on cost in these names if you hold them for, say, 10 years. An example here is Microsoft. I bought that stock in 2012. My yield on cost now is over 7%. And many of us in the community, our goal is to invest in growth, outperform, sell the profits, and buy dividend stocks. So blue chip dividend stocks, income stocks, ETFs like SCHD for endgame. So when I say endgame, I'm basically saying early retirement to bridge the gap. So this is generally in an individual taxable brokerage. You can do whatever you want. You can put it in your Roth if you want. I generally invest in ETFs in my retirement account, but again, do what's best for your money. But if you are going to retire before, say, 65, say you want to retire at 55, you're going to need an individual taxable brokerage to bridge that gap. And that's where this fired methodology comes in, basically investing in growth, outperforming, taking those profits, investing in blue chip stocks, and living off that passive income. And I know that strategy might not be for everybody watching, and that's okay. This sample portfolio still works just fine, regardless if you're striving for early retirement or financial freedom or not. And again, guys, you can tweak that however you'd like. It's really just a sample to get you started. So if you want to invest in more dividend stocks, less dividend stocks, and so on, every portfolio should be unique to the individual. I always say that every portfolio should have the DNA of the investor, whoever owns that portfolio. So you might be more passionate or have more experience or understanding about certain industries than others. You might have more comfortability with growth stocks and maybe not. Maybe you're more into dividend stocks. So tweak that however you want. This is just to get you started, but I think it works great for a young investor or somebody who has many years in the stock market looking to capture growth from secular growth trends, mega trends. So we talk about things like artificial intelligence. Of course, that's been huge in 2023. Data centers, cloud computing, cybersecurity, aerospace and defense, space exploration, video gaming, online gambling, augmented reality, virtual reality, mixed reality, autonomous driving, EVs, EVs, genomics, robotic surgery, esports, 5G, 6G, 7G, anything with a G behind it, e-commerce, digital twins, cryptocurrency, metaverse, clean energy, and more. So you want to invest in these mega trends to capture this growth. We're really in a new industrial revolution. If you look at the first industrial revolution, it played out over a course of about 100 years. Now look at towards the bottom. While some believe that we're still in a third revolution, it is arguable that the third revolution only lasted 30 years and ended with the commercialization of the internet, which led to the dot-com boom and bust about 10 years after the internet was first publicly available in 1991. There's absolutely no question in my mind that we're in a fourth revolution, and this is going to include those megatrends we just talked about. Having the internet more accessible, broadband, high-speed internet is more accessible now than ever, and that's growing exponentially. You think of like Starlink and you think of like Kuiper with Amazon, satellite broadband internet, 5G, 6G, it's going to change the game. And artificial intelligence is fueling a lot of these growth trends as well. And it all comes back to semiconductors, the new oil. So of course, I've been a big investor in semiconductors. Nvidia is my top holding in my main portfolio. And I own several other stocks. You can check out some videos on the channel that show you all the different semiconductor companies that I'm bullish on and that I own. And if you like this kind of content and you're new here, subscribe to the channel, click that bell for notifications. So one day I was thinking, and this is my brain on a piece of paper, I tried to visualize all the mega trends in a flow chart, and I drew this up. Now I first shared this in the Fired Up Wealth conference series. There's a series of 14 videos. You can go watch those right now. Go to patreon.com/Fired Up Wealth. And there's a much deeper dive video that talks about blueprint and portfolio design, as well as deep dives in megatrends like electric vehicles, semiconductors, space exploration, metaverse, crypto, and more. So semiconductors power everything. They're the new oil, and cloud powers the future and needs semiconductors. So really, cloud computing fuels all these growth trends, and cloud computing needs GPUs and semiconductors to work. So here's a quick example of flow chart to help you map it out and think. And yours might look a little bit different. Make your own flow chart. But at the very top right, you can see semiconductors, and that's going to include different segments. On the far left, you've got SaaS, so software as a service, cloud, cybersecurity, data, AI, quantum computing. In the middle, you've got EVs, clean energy, space exploration. Then you've got e-commerce, Web 2.0, and Internet of Things. And these all tie together. You can see how the arrows are going different directions. They're all kind of looped together. You know, if you look at the far left in SaaS, it flows into big data. Big data flows into robotics. Robotics flow into automation, and so on. So for me, I'm very bullish on semiconductors and cloud because they really help fuel all of this. Now, even though this portfolio isn't focused solely on alpha, just on growth, and it has dividend stocks and ETFs baked into it, into the plan, this portfolio is still up almost 80% in 2023. And as I mentioned, we started this portfolio in 2022. We've been averaging about $1,500 per month that we've been invested for about 18 months now. We've grown that account from zero. We started it from scratch, and we got at one point over $80,000 in 2023. So from $0 to around $80,000 in a course of about 18 months. The reason I share this is because if you're starting out as a new investor, sometimes it might feel like it's hard to get started, to get that ball rolling. Once you get that ball rolling, you get to that first $100,000. You've heard this story before. Next thing you know, it's going to compound. You're going to have $1 million portfolio. So if we can do it just by simply dollar cost averaging into some of our favorite stocks and ETFs, and really just using what we know, our knowledge, and doing our best in terms of due diligence and having conviction in what we own, just understanding those secular trends. If we can do it, you can do it too. So next, I'm going to share the top 7 holdings in the Fired Up Wealth community portfolio. Before I do that, if you're new here, make sure you subscribe and click the bell for notifications. And if this video is helpful, drop me a like and drop me a comment. Let me know what you think. Now, if you want to see this entire portfolio, all 42 positions, every single concentration, how much each stock is up or down, there's an exclusive video on Patreon right now. You can join any tier, including Eric's Aliens, and you can access that video and watch it right now. So I mentioned earlier that Nvidia is my top holding in my primary taxable brokerage. That's about $1.7 million right now. And I've owned that since 2018. up nicely on it. It's really just house shares at this point. So I bought that in the 30s. Now this portfolio, of course, again, we started this in 2022. We started buying it, especially when it got to 115 less. I was pounding the table, kept going lower. People were freaking out online. What's going on? I think it got down to 108 at one point. We kept buying. Now up 233% in the Fired Up Wealth Community portfolio and the #1 position. Now, a lot of you are asking, is it a buy now closer to, $450, $500 in that range? It's going to be dependent on earnings. Now, one thing I will say, if you look at a couple of different graphs out there talk about the total addressable market for semiconductors, and we're looking at $1 trillion total addressable market by 2030. Nvidia is $1 trillion market cap by itself. So I am bullish on this company. I think that the stock will probably go higher. I think it'll probably in the 600s, especially because analysts keep pushing the price targets higher. It's not going to go in a straight line. It needed to consolidate, and you're really going to need to see some earnings here. So it's one of those stocks that I do like. Of course, I'm in a position right now, I'm planning to win. I've sold the initial cost basis, I've taken profits, and I'm riding house shares. Now in this portfolio, we have not trimmed it, and it is a little bit overweight. I think it's closer to 8%, and generally we like to have 5% or less. So my plan with Nvidia is I'm thinking it's gonna go to $600 over the course of this year. I'm going to sell that, and we do have one stock in the portfolio, Upstart, that's down. I'm hoping that Upstart can kind of go up a little bit higher as well. But I'm going to harvest and basically sell maybe a couple shares of Nvidia and get rid of that position because I don't have conviction personally in Upstart anymore. But right now, up 233%. I do think after consolidation, assuming earnings go well, that the stock will be over at $600 at some point in 2024, but it is a very high risk stock to buy at this point after it's ripped so hard in a short amount of time. The second stock in this portfolio is Datadog. Now, most of this is going to be profits. So all these top holdings, the reason they're top holdings is we bought them at much lower prices and they've ripped much higher. This is another one that's slightly overweight. I think it's around 6%. And I'm looking to trim 1% of that in 2024. Now look at the technicals. I think it's pretty healthy if we have some sort of a sell-off. If you remember in 2023, at the beginning of 2023, we actually had a sell-off the first 3 days of January. A lot of people don't remember that. Some of the lowest prices on a lot of these growth stocks you would have actually gotten January 6th or something like that in 2023. So I think that if we sell off a little bit, people are taking profits at the beginning of the year and maybe reallocating some of that, you could see some new market leaders emerge. But overall, we've seen breadth of the market. We've gotten back to those all-time high levels. And I think the market's just pausing here. There's plenty of macro risks that we've talked about, we've talked about the macro risks for months and months and months, really the last couple of years in the channel. So I'm optimistic for 2024 overall. But like I said in Discord, guys, if you look at the stats on this, there's a pretty good chance you're going to have at least a 5% pullback. It's in the 90 percentile. And if you look at 10% correction, it's something like a 60-65% chance that you're going to see that at some point. Now, stocks don't have to go up in a straight line. So you could see volatility. You could see sell-off at the beginning of the year. You could see the sell-off at the middle of the year. Look at 2023. That wasn't a straight line either. We had ups and downs. So assuming everything goes well with election year, I think a lot of these stocks will be higher, but they are expensive at these prices and it's hard to buy them. Again, most of these we bought at much lower levels. The third stock is Skywater. This is a great example. Now I consider this spec. It's a small cap semi and it really needs to be trimmed as well. 2024 at some point. And a lot of these stocks I looked at the end of 2023 and I'm thinking, I could trim a little bit more on some of these here, but I'm going to kind of wait to see how 2024 goes. Everything was very bullish towards the end of the year. And again, we could see some consolidation. It doesn't mean the market can't go higher at some point in the year. Now, if you have that trading mentality, it makes sense to sell when you have these things rip. Generally, when we're buying, again, we're holding for 5 or more years unless the story changes. So it's not buy and hold forever. It's not just holding blindly. If something goes parabolic, we generally sell. But this is one that has the potential to go higher, especially if earnings come in where we think they're going to come in over 2024. And throughout the course of the year, this is one that we want to trim down and get not to be the third position. So most of this is profits, buying heavily when it was really beat down. I thought it was just too hard to pass up some of these stocks. Generally speaking, you don't want to have a spec stock at more than 1 or 2%. So this one's a little bit out of whack. Again, from profits. Unrealized gains, right? Number 4, it's going to be Crowdstrike, up over 100%. This is another one we were pounding the table when it got to the lower levels. I want to remind you guys, if you want to see the entire portfolio, this community portfolio, all 42 holdings, weight, cost, the cost basis, the gains, everything, the full portfolio, visit patreon.com/firedupwealth. Any tier will get you access to this exclusive video. I'm also going to be dropping another series, another set of videos here in a couple of days. That's going to cover my primary taxable brokerage, $1.7 million. So I'll do a YouTube video and then we'll have a Patreon exclusive. That one's going to be for elite members and higher. And we actually do have a free 7-day trial for elite. So if you want to check it out, see what Discord's all about, again, go to patreon.com/firedupwealth. You can actually go watch this video for free on the trial. Go check it out. Number 5 is going to be Tesla. I know a lot of people, especially YouTube, a lot of people love this stock. We just had delivery numbers come in today, very strong. This is one, again, pounding the table when it got to specific prices. I remember on Twitter, people saying, I'm not going to touch Tesla unless it's $75 a share. And I always say, why not dollar cost average? Buy a little here, buy a little there. But generally, there are a lot of people out there, they want to time the bottom perfectly. It doesn't work. Now, if you look at this portfolio, we didn't come close to timing the bottom on anything, and we didn't try. We were DCAing levels, and oftentimes we'd buy it and go a little lower, we'd buy some more. Now, it's easy in hindsight to say, why don't you just buy it when it reverses and goes the other way? Most people that say that don't actually ever buy at all, because by the time they figure it out, they miss it. So again, this is going back to the mentality of trading versus long-term investing. As a long-term investor, if you're investing in a stock that you have high conviction, your confidence to be worth more later, you're willing to pay a certain price and lower, and you're just buying it and you're feeling good about it longer term. If you're trying to snag the bottom and trade and make a quick buck, well, you have a different mindset, and that whole psychology around it, it will just crush you. These kind of stocks are going to be volatile, up, down, and sideways. What you really have to do if you're a long-term investor is say, do I want to own a part of this business? When you own a stock, you own part of the business. And will this business be worth more in 5 or 10 years? I feel confident in all these stocks, especially a name like Tesla. Now, it's a love-hate stock. Either you love it or you hate it. And if you're bearish on it and don't believe in it, that's okay. We can still be friends. Number 6 is SentinelOne. Now, I'm a big fan of Crowdstrike. And if I were to buy one stock over the other, it would be Crowdstrike over SentinelOne. With that said, there's a huge total addressable market. And when this got to the prices we bought it at, it's up 76% or something like that in the portfolio. It was just too hard to pass up. And I thought it was a decent buy. If I were buying one or the other today, it might look different, but I thought those prices were good where we were kind of snagging and DCAing, and now we're up 76%, and it's the 6th largest holding, 6th largest position in this portfolio. Now I'm going to get to number 7. Again, I want to invite you to go check out the exclusive video, look at all 42 positions. And when I share this with you, the intent is not that you go copy it. It's to give you an idea of what we do. And really the whole idea for me is to help educate people on how to buy stocks, how to build a growth stock portfolio. The intent is not to just give you a list of stocks and go buy them. We talk about in Fired Up Wealth, we want to teach you how to fish, not to be your fisherman. So if you're taking this seriously, trying to learn, I think these kind of videos help educate just the overall methodology of what we're trying to accomplish. So the 7th stock, any guesses? The 7th stock is Indy. And this is another one we bought heavily when it was beaten down. This is one I said on YouTube, I think $6 or less, pound the table. It went in the 5s, people freak out. It went in the high 4s, people freak out. It's like, it's still a buy. It's just a better buy at $4.75 or whatever it was at than at $6. This one we are up nicely on as well. This is a lot of profits baked into this, and it's the 7th largest holding. So both Indy and Skywater, if those climb higher over 2024, we're looking to trim several of these names and kind of rebalance that in 2024. If you're new here, guys, make sure you subscribe to the channel. Click that bell for notifications. You're going to want to see the next video coming up with my primary taxable brokerage, that $1.7 million account. So subscribe and click the bell for notifications so you don't miss that one. If this video is helpful, make sure to drop that like and comment. And I hope you guys have an awesome 2024. We're going to be on fire, continue to be on fire on this channel. So make sure you're part of it. Have a great rest of your day. Take care.